Welcome back to AutoBikePro, your trusted destination for the latest updates on bikes, rickshaws, and upcoming cars. Today, we're diving into something that's caught the attention of every bike enthusiast: the sudden drop in Royal Enfield's production and pricing in 2025. What's happening behind the scenes of this iconic brand? Let's explore. Supply chain disruptions. One of the key reasons behind this slowdown is ongoing supply chain disruption. Even years after the pandemic, manufacturers across the world are still struggling to get critical components. For Royal Enfield, this meant a severe shortage in parts, around 20 to 25%, forcing the company to scale back production by nearly the same margin. With essential supplies delayed or unavailable, assembly lines couldn't operate at full capacity, and that significantly affected their output and revenue. Rising production costs. At the same time, the cost of producing each motorcycle has gone up. New safety features like ABS, increased regulatory requirements, and higher insurance costs have all added pressure on the company's manufacturing expenses. To keep up, Royal Enfield had to raise the prices of its bikes. However, these price hikes didn't sit well with many buyers, especially in the mid-range market, where customers are highly price-conscious. As prices rose, the demand slowly began to dip. Falling demand for key models. Another factor is the changing taste of riders. The Royal Enfield Classic 350, which once dominated Indian roads and accounted for a huge share of domestic sales, is now losing its charm. Buyers are now looking for bikes with more advanced technology, smoother performance, and modern styling. Competitors like Bajaj, Hero, and TVS have stepped up their game by collaborating with premium brands like Triumph and Harley-Davidson, offering new alternatives that appeal more to today's riders. Profit margin pressure. Despite having strong sales numbers, Royal Enfield is facing a serious squeeze in its profit margins. The company has been investing heavily in launching new models and promoting them during festival seasons. But the returns haven't been as strong as expected. These aggressive promotional strategies, combined with higher production costs, are eating into profits. Investors have taken note, and as a result, the stock of Eicher Motors, Royal Enfield's parent company, has taken a noticeable hit. Strategic shift and future plans. To stay relevant, Royal Enfield is now shifting gears. The brand is introducing newer models like the Shotgun 650 and Hunter 350, aiming to attract younger and more global audiences. They're also expanding their market reach beyond India. However, with rising competition and evolving customer expectations, staying ahead won't be easy. The company will have to innovate continuously while keeping a close eye on pricing and production efficiency. Conclusion: what lies ahead? So in summary, the drop